bias, hands down, has to be the most overcomplicated topic that you can ever find when it comes to the technicals part. Now, here's the thing. What if instead we try to predict what the next 1 hour is going to do or the session going to do instead of predicting what the next 1 week is going to do? That way, you're going to be focused on the current price, more focused on the execution rather than predicting the price. Because the reality is this: once you understand the technicals part, the whole predicting game just becomes so much easier. And if you were to focus only on the prediction, your execution is going to lag. My name is Jason. I've been full-time trading for nearly 5 years and been a technical coach for nearly 2 years. And in today's video, I'm going to be showing you guys exactly how I get my bias for London session. Okay, now, first things first. Let's talk about the basic things. What pair to trade during the London session? According to my data, this is not me just yapping out of nowhere. The most consistent pair that you will find is gotta be Euro USD and GBP USD. And that is due to its correlation. Now, I'm not trying to say that you cannot trade any other pairs. Just make sure stick to 1 or 2 pairs and trade them consistently so you understand your playground even better. Okay? Now, the reason why we want to stick to Euro USD and GBP USD is because of these couple of things. Number one, it has its own accumulating time. At the time where it's supposed to accumulate, when it's supposed to build up liquidity, okay? Every single pair has its own time to accumulate. It's just that Euro USD, GBP USD are the most consistent pairs to accumulate during the Asian session itself, okay? So now, technically speaking, let's try to connect the dots here. Does that mean that you cannot trade the Asian session? Not really, but don't trade Euro USD and GBP USD during the Asian session. Instead, maybe trade the Japanese yen pairs. So now, let's talk about the pairs here that I highly recommend you guys to trade. First is, we're talking about Japanese yen pairs, okay? So first is Euro GBP JPY and Euro JPY. Now, why am I saying like GBP JPY and Euro JPY? Is because these two pairs, they correlate. So make sure you pick 2 pairs that correlate and then trade them consistently during, the session that you can be on the chart. Now, these two here, GBP JPY and Euro JPY, you're expected to move during the Asian session, okay? And these 2 pairs here, they closely correlate to each other, meaning that if one pair is bullish, the other pair is going to be bullish as well. Now, these 2 pairs there are hands down for Asian session. Now, for London, you will have Euro USD and GBP USD. And these 2 pairs, again, they correlate so much to each other. And highly recommend you guys trading these 2 pairs during the London session, as you're going to be trading more efficiently. Trust me, that's just how it is. Now, when it comes to the New York session, you will have the same thing, Euro USD and GBP USD. Now, if you're someone who trades indices, right, I highly, highly recommend you guys only looking at indices after New York Stock Exchange open or during the PM session, okay? And obviously, when it comes to indices, we have NASDAQ and S&P 500. Now, when it comes to NASDAQ and S&P 500, again, they are very closely related to each other, okay? So if NASDAQ is bullish, you expect S&P to be bullish at the same time. So you can identify your entry model such as SMT, okay? Or maybe if the other pair has manipulated, let's say NASDAQ manipulated, S&P 500 doesn't really have to manipulate, right? These are the correlated pairs that I'm talking about. Now, the reason why we want to have or trade the pairs that are closely correlated is because there are times where you have identified your point of interest. Let's say you have identified your point of interest and you're waiting for that point of interest to get tapped, but instead price just moves before that point of interest getting hit. And now you don't have an answer for it. The only answer for you to find out why did the price move before it tapped into your point of interest is to only look at the correlated pair. Meaning that, let's say, for example, here, Euro USD, it didn't actually tap into your point of interest. But then when you go to GBP USD, in that pair would have tapped into your point of interest. giving you a confirmation that, you know what, GRUSD doesn't really have to tap into my point of interest because GBP has tapped into it. Meaning that if entry model were to be provided within EURUSD itself, it is already valid for you to take the trade without waiting for the point of interest to get tapped. Okay, that's the basic of the correlation of pairs. Now let's get back into the bias part. Okay, now we did talk about that EURUSD, GBP has its own time to accumulate, and that is during the Asian session. So again, let me draw for you guys a couple of scenario for Asian session that can tell you that, you know what, the first 2 hours of London Open is a high probability time for you to trade. Okay, now as you guys can see in front of us, we have 3 Asian session scenario where we can expect for London session to have a really, really high probability trade within the first or second hour of the London opening itself. Now, if you guys were to see here, what are the most common thing that we see right now on these drawings here? What is the most common thing that you see right now in the drawing? Now, if your answer was that, accumulating, yes, accumulating, but then the most common thing here is that the price is building up liquidity for the entire Asian session itself, where over here it's building up liquidity in a form of consolidation. Sellers are selling from the high, buyers are buying from the low. And then again, here in this particular scenario, what is the thought process behind the whole price action here? That sellers are selling off of these trend lines, making them into a basically build up liquidity. Same thing over here with this particular scenario. Asian session just built up liquidity towards the upside, absolutely inviting in buyers to get in buys just for London session to reverse. Okay, now we need to combine. So this is, we can't really use this as a pattern, guys. We need to combine it with point of interest. So we need to understand our point of interest. We still need to look to the left where the price is reacting off of. That is very, very, very well needed. Now here's the thing as well, guys. When it comes to the build-up liquidity of Asia, right, we need to understand the differences between price building up liquidity or price delivering efficiently. Okay, if you guys don't know that, watch my previous video where we talked about efficient price action. And yeah, you can come back again to this video and watch the build up liquidity here. Now, looking at this bit here, the Asia high and Asia low will only be taken if it's a build up liquidity, meaning that if the entire Asian session was a build up liquidity, you expect Asia high or Asia low to be taken, right? And if you're not familiar, Asia high and Asia low in itself is a liquidity. Okay, so now looking at this particular bit, as I said, can't use this as a pattern. And now if you guys are asking on what time frame should I look for this kind of scenario for the Asian session, now highly recommend you guys checking out the M5 to look at Asia range. If not M5, can do it on M3. If not, if you're way too advanced and you understand the 1 minute time frame, you can basically eliminate all of the noise on the 1 minute time frame. Highly recommend you guys using the 1 minute time frame. If not, then stick to the M5 and the M3 itself. Now, understanding point of interest to the left, yeah? Let's say you have bearish point of interest to the left. You still gotta wait for the price to tap into that certain point of interest to the left in order for you to look for sells. But guess what? Your sells here would be valid until Asia low. Bare minimum until Asia low. Okay? Now, guaranteeing that over here, price here absolutely just built up liquidity. At the low here, it's just a built up liquidity. And the way it pushed to the upside there was also maybe in a form of some sort of build up liquidity. Now, you selling from the high, targeting Asia low would absolutely be very, very high probability. Okay. So now step number 1, identify Asia range, the Asia build up liquidity. Step number 2, wait for London to open. Step number 3, execute your trade at a certain point of interest that is given to the left, considering you have an entry model given on the lower time frame. Okay. Now, you see, here's the thing. Whenever we pick our point of interest on higher time frame or medium time frame, we try to enter on that time frame itself. That is absolutely not. That's not exactly what we're doing here. That's exactly the opposite of what we're gonna do. What you need to do is to identify your medium time frame, higher time frame point of interest to the left. You still gotta wait for the price to tap into that point of interest, go to the lower time frame, and wait for one of the entry model to be given in order for you to look for that sells in this particular scenario. Okay. Now, does that mean that it is already valid for us to just sell from the high there and target Asia low right away? Not necessarily. Okay. Because you still want to have to identify your internal liquidities and your internal imbalances to use them as your break-even levels. Now, why do we need break-even levels? Now, here's the thing, guys. Break-evens, hands down, the most important thing in my trading system. Hence why I'm able to maintain 68%, 69% win rate with while having 1:3 risk to reward. Okay. And now the 68%, 69% win rate that I'm talking about, it's not a win rate in itself. There is a catch. It's win slash break even rate. So most of the trades, instead of it being losses, it is going to be turned into break even trades. Okay. That way I can have an absolutely shit day when it comes to bias where I don't have clear bias. However, instead of me taking a loss just because I have wrong bias, right? What I'm going to do is that trade will become a break even. Once you understand how to identify your break even levels, if you're interested how to find your break even levels, comment down below, comment break even. And if I see enough, you know what I'm going to do? I'm going to make a video on it. And trust me, as usual, it is going to be a banger. Now, let's look at this one. We said that selling from the high, considering, entry model is given, we would be targeting the Asia low would absolutely be valid. Yeah, that is absolutely what we're going to do. Now, same thing here. Let's say, for example, this one, this was for bearish, right? What if instead of price doing that, price did something like this, What would we do then? Obviously, mark your bullish point of interest if you have any. And considering entry model there is given, you're going to be looking for some sort of buys to target Asia high. Just the opposite of what we did there. Okay. Let's look at this. It's very, very versatile. That's the reason why I am a full-time scalper since, I don't know, like not day one of trading, absolutely, because at that time, like we were still trying to, or I was still trying to figure my shit out, whether I should scalp intraday or swing. But I've been scalping right now for way more than 3 years for sure. And yeah, that's the reason why I choose to scalp, because we can be as versatile as possible with our bias. And this is what I mean, because from time to time, you have Asia high, Asia low being built up. And instead of price mitigating the above point of interest, it mitigates the lower point of interest. And now you should be looking for some sort of buys. But then there are times where instead of the low point of interest here getting mitigated, the high gets mitigated first. So now you're looking for some sort of pullback sells. Okay. Let's look at this one. How would you approach this kind of scenario then? Same thing. You want to wait for London to open, tap into your point of interest on the medium time frame or higher time frame, and then wait for entry model to be given, execute it to target Asia low. Considering that all of this Asia low here is a build-up liquidity, yeah, that's an absolute must. Then you can only target Asia low. But then if you were to say that, you know what, Asia low here, let's say Asia low was here, and the build-up liquidity was only till there, over at this bit, Asia low, the price delivery for Asia low was really good. Let's say something like that. That's a good price delivery. Then you can't really say that, you know what, I'm going to target Asia low. Let's say that one is Asia low. It is not valid for you to target Asia low. No, because their price delivery is good. What's bad in terms of price delivery is here. These build-up liquidities, they act as weak structures, guys. They act as magnets towards the price. Okay. So what you need to do is wait for London to open, tap into your point of interest, look for some sort of sells from there to target the short-term build-up liquidity there that you can have. These structures here are weak structures. They act as a magnet towards the price. Okay. So that would be for this scenario. And then for bullish scenario, it is absolutely the same as this, just a tiny bit different. Where again, just the opposite of it, right? Again, same thing. This here, given you have built up liquidity for the entire Asian session, you want to wait for the point of interest to get mitigated, wait for an entry model to be given, look for some sort of buys to target Asia high or whatever the liquidity that is given in the middle of Asia. Now, the way to identify Asian range, I use an indicator to do that. It's very, very easy to to set up the indicator. It's pretty simple. If you guys want this custom indicator for absolutely free, this one, comment down below and I'll send you guys the individual link to this indicator. Okay. Now, the way I identify, very easy. I just go to the 5-minute time frame and kind of look at Asia range. Look at this. Look at this one here. Asia kind of build up, right? In a range. Asia low gets taken. That's London open, okay? There's purple box there. That's Asia. That's London. And then that's New York. Look at this one. Build up liquidity, or basically, Asia range. And then London opens. It takes Asia low to the left, mitigate some sort of a point of interest. Buys happen. Okay. Now let's look at it today. For today's price, right? All of this is basically, again, Asia range. We're building up liquidity, meaning that if price end up taking the low there, entry model is given, you're going to be looking for some sort of buys. It's literally that simple to identify the bias going into the first hour and second hour of London. You don't need rocket science to identify your bias. The reason why you are overcomplicating your bias is because you're trying to predict what the next 1 year is going to do, where we don't even realize that in order for us to make money, you don't really have to predict what the price is going to do for the next 4 hours, 8 hours, 10 hours, a day, 2 days, right? If you're a scalper, one hour candle a day will keep your 9 to 5 away. So yeah, that was that. Hope you guys learned something new and make sure to trade responsibly. I'll see you guys in the next one.